Hi, welcome back to Grace in Finance. In today's video, I'm going to show you 5 ways the rich build wealth in 2022. Number 1. Track every expense and income. Many wealthy people believe that detailed budgeting is necessary to achieve financial success. Most of these successful people use the TwoWay process. The first step in the TwoWay process is to track your expected income. Your expected income may come from your salary, business, or investment. With the expected amount of income in mind, you then start budgeting. Budgeting should be done in the 20-30-50 method, where 20% of your income should be allocated to savings, 30% of it should be left for entertainment such as watching movies or eating out. The remaining 50% is allocated to the daily living expenses like rent and groceries. Once the budgeting is done, you should then track all your spending. You can do it either digitally or the old-fashioned way, on paper. The digital way is to use apps that are connected to your credit cards. These apps will allow you to track and categorize every purchase you've made. You can also do it the old-fashioned way, where you write or type your expenses every time a purchase is made, and then manually add them up at the end of each month. Wealthy people practice this method because they know that not measuring your expenses will lead to financial mistakes. Even if you're not earning a lot of money, it's important to learn wise money habits early. The earlier, the better. Number 2. Live below or within your means. Even when you do see millionaires buying the most expensive bags, cars, or houses, they still live within their means. You see, they know how to avoid the income trap. It happens when people start earning more money and suddenly are more tempted to spend more too. For example, when you suddenly earn more, you'll always be tempted to buy a brand new luxury car even when your current car is working perfectly fine. The mindset of spending more when you earn more is wrong. Just because there is more money available doesn't mean that you should increase your purchases too. With this unwise spending, most people tend to go broke by maxing out their credit cards. This is bound to happen when you don't have financial control. When no one else around you is giving you sound financial principles, educate yourself with financial books to learn that control. Spending below your means as a business owner is very important. A business will have good and bad times. But when you live below your means, even when there will be unprecedented, harsh economic times in the future, your financial discipline will help you recover fairly well and proceed to method number 3. Method number 3. Put your money to work for you. Invest in properties or other assets that will give you passive income. The wealthy put their money to work through investing. The average person, however, does not invest and instead, they spend their money or put it in a savings account. While saving your money and putting it in a savings account is better than spending it, your money will not grow if it just sits there. It will never be enough to make you wealthy. The thing about saving money is that it will devalue if you just leave it in a savings account. Typically, a savings account only has 0.09% of interest. If you have $50,000 in your savings account, you will only earn $45 annually. Number 4. Be disciplined in handling your finances. Discipline is one of the key aspects to becoming wealthy. If you want to have a high-paying job in the future, generally, you will need to study hard for years in college. If you want to have success through building a business, you have to continuously work hard even when your friends are out partying or on vacations. All of these scenarios, wanting a high-paying job through education and building a successful business through hard work, requires the utmost discipline from you. Even when you do become successful, if you lack financial discipline, you will not achieve long-term wealth. You don't need a sports car if your 10-year-old car still works perfectly fine. Be disciplined with your money and don't make any unnecessary purchases. While saving takes a lot of discipline, there are a few ways to make it easier. The first way is to set up automated deductions. Every paycheck, a fraction of your income should go directly to a savings account instead of having the full amount of your income transferred to your account completely. For starters, you can allocate at least 10% of your paycheck to a savings account automatically. When you see that this technique helps you save more, you can go up as much as you can afford. Saving in this method makes you unable to spend your entire salary instantly. The second way is to start earning more. Even when you are disciplined with your money, If your income is not that high, you won't be able to save that much. Methods like cutting costs will only save you small amounts of money. You will still need to pay for housing, food, and transportation, which is a huge factor in your daily expenses. You can get an extra job to help earn an extra income on the side. Driving an Uber, working freelance, and maybe tutoring will help you increase your income. As the saying goes, becoming rich isn't just about earning money as much as it is about saving it. This is why the wealthy always put their savings to work using investments. The earlier you can start investing, the better. On average, millionaires spend 30% of their household income annually to invest. It is considered one of the significant parts of their wealth accumulation. And lastly, number 5, never spend the principal. Even when these millionaires spend a lot of money on luxury cars and luxury goods, they never go poor because they never spend a single amount from their principal. A principal is the initial amount of money you've put into an investment. If you're buying 20,000 shares for $200,000, they paid $2 a share for the annual dividend. The $200,000 is your principal, and the $40,000 is your dividend income. The rich will rarely have their wealth decline because they never detract from their assets that earn. If you want to spend your money on luxurious things, then you need to buy assets that will pay for them first. Most people get their money through active income. Only earning an active income means that whatever you spend is directly deducted from your wealth. This is because you don't have a passive income that is earning you more money. So, what are these passive income methods to earn excess money from? Well, you can invest in investment properties, real estate investment trusts, and dividend stocks. Investment properties will give you a passive income by renting the property out to tenants and collecting rent. A real estate investment trust, or REIT, is like a mutual fund for real estate investing. You own REIT through buying stocks. When you invest in a REIT, you basically share profit produced by a real estate investment. It's like investing in real estate without being in the hassle of owning a property. The hassles of being a property owner are maintaining a property, issues with tenants, and collecting rent. In REIT, you won't be able to suffer from these. Lastly, dividend stocks are great as you don't have to decrease the amount of money you have in the market while you earn annually or quarterly. In conclusion, only spend the income your assets generate, not the principal, so you can be able to enjoy spending from time to time, while at the same time, growing your wealth. Thank you so much for watching. Please like, subscribe, and click the notification bell to notify you of new helpful videos.